Welcome. This is Smith Syndication by Verity Investments, LLC. My name is Jeffrey Smith. I am the General Manager. Mission Statement: syndicating projects for repositioning and stabilizing distressed apartments for radiant wealth creation to serve an emerging market of displaced former homeowners and new family formations. Investment strategy and opportunity. Acquisition strategy: physically and managerially distressed multifamily properties offering deep price discounts from motivated sellers. Experienced power team. Our power team has strong experience in analysis, due diligence, acquisition, repositioning, and management of multifamily properties. Strong industry fundamentals. Favorable industry and economic conditions have created optimal investment timing. Focused opportunity: strongly recovering employment fundamentals in Tier 1 MSA, Metropolitan Statistical Area markets, housing migration from owning inflated single-family homes to renting in multifamily community lifestyle, and steep price discounts for all cash acquisitions. Investment financing and yields. Access to repositioning financing. Readily available short-term private commercial financing as debt, preferred equity, or joint venture provide all cash offers, no seller financing or assuming notes, and fast closing. Access to institutional refinancing. Institutional refinancing debt is much easier to acquire with a proven performance history, especially on multifamily housing with strong protective created equity margins. Attractive yields. Superior cash flow margins with strong debt coverage ratio protection to tolerate recessionary pressure on income and expenses. Targeting double-digit annualized yields from 10% to 15%, with recovering the initial investment within 12 to 48 months, while retaining ownership and net positive cash flow, infinite yield, with apparent return on equity, ROE, from 10% to 12%. Tax-free cash out. Refinancing with cash out is tax-free and available for rolling into the next project. For example, we could structure repositioning financing as first position debt, 70% loan-to-value, with 10% to 12% annualized rate. Underneath that is second position debt or preferred equity, 20% loan-to-value, with 12% to 14% annualized rate. And underneath that, third position common equity, 10% equity to value, with a yield of 0% to 18%. Sometimes the common equity investors must wait to receive their cash flow and exit strategy during repositioning. We then reposition and stabilize the property. Once the property is repositioned and stabilized, we obtain tax-free cash-out refinancing, 70% after repaired value, approximately 6% annualized interest rate, retaining equity approximately 30% after repositioning value, with an apparent 10% to 12% return on equity, and the common equity investors receive cash out for up to 25% annualized yield on their investment. Company overview. Smith Syndication is currently a division of Verity Investments, LLC, a Colorado limited liability company. Smith Syndication focuses on the acquisition and repositioning of moderately to severely distressed multifamily apartment properties, with the intent to refinance to recover all repositioning financing both equity and short-term debt, while retaining strong created equity and cash flow margins. Lesser performing properties are sold to retail cash flow investors. Smith Syndication is currently focused on finding opportunities in the desert Southwest, sand states of Arizona, cities of Phoenix and Tucson, and Nevada, cities of Las Vegas and Henderson, and our home state of Colorado, near Denver, Boulder, Longmont, Fort Collins, and Colorado Springs, and on the mature oil industry states of Texas, cities of Dallas and Houston, and Oklahoma, cities of Tulsa and Oklahoma City. We focus on small to medium-sized properties from about 20 units up to about 50 units. This property niche size allows for quickly fine-tuning our portfolio instead of waiting for a year or two to sell a larger, hundreds of units property. Smith Syndication selects Power Team members for their extensive experience in all aspects of the process, including financial analysis and due diligence, acquisitions, financing, repositioning, asset management, and disposition. Executive Management. My name is Jeffrey Smith. I am the General Manager of Smith Syndication, a division of Verity Investments, LLC. Jeffrey D. Smith has over 7 years of experience in real estate financial investment analysis, including over 5 years as a licensed Colorado real estate broker. He has excelled in dozens of real estate law and investment classes, and published articles, books, and educational videos on real estate investing. He has authored dozens of sophisticated Excel spreadsheets for real estate analysis and financial modeling. He sells some of his Excel spreadsheets and investment courses to real estate investors. He presents educational real estate investing courses both for online and live seminar formats. He provides private consultation to wealthy real estate investors. Jeffrey D. Smith is fully trained in all aspects of private commercial mortgage finance. His business acumen and leadership skills provides the expertise for personally negotiating contracts with attorneys and executive management and financial analysis and structure. As General Manager, Jeffrey D. Smith is responsible for vetting and selecting the Power Team of local professional service providers, property sourcing, attorney, real estate broker, private commercial lender, property management, title company, insurance, general construction and renovation contractors, negotiating contracts, and supervising the project plan from start to finish. Power Team functions: property sourcing, commercial listing brokers, pocket listings, website registration for email notification. Property management companies operating in target market. We find these through irem.org. Commercial listing websites: LoopNet.com, CoStar.com, Craigslist.org. Due diligence. Selected property management company provides the repositioning business plan. Selected general construction and renovation contractor company provides scope of work. Financial, physical, and legal due diligence performed by local professionals. Repositioning. The winning bidder, general contractor, begins renovation. The winning bidder, property management company, begins repositioning for new tenants. Stabilizing. The property management company stabilizes and seasons the tenant base according to higher rents and the marketing plan. Seasoned financial performance records are submitted to refinance lender. The cash-out refinance fully redeems all repositioning financing and provides tax-free cash-out for rolling into the next project. The Radiant Wealth Creation Formula. Investment strategy. Acquire distressed income properties with private financing. Reposition and stabilize for higher income and good quality tenants. Cash-out refinancing to redeem the repositioning financing while retaining created equity and net positive cash flow. Acquisition criteria. About 20 to 50 dwelling units in Class B or C distressed apartment buildings. Arizona and Nevada, sand states. Oklahoma and Texas, oil patch. Focused asset management. Cost-effective upgrading and possible merging of adjacent dwelling units to create larger, more spacious units. Community lifestyle with professional asset management. Clean and comfortable dwelling units with good appliances. Investment strategy. Purchase distressed Class B or C multifamily assets with value-add characteristics at stabilized capitalization rate of 8.5% to 12.5%, return on equity 15% to 20%, and cash flow margin at least 35%. Create a substantial cash flow portfolio on an asset-by-asset basis in middle markets. Select and manage an experienced power team to oversee lease-up and operations. Exit strategy is to refinance to redeem the repositioning short-term financing and to hold the stabilized portfolio. We will sell the less desirable properties to an institutional investment company. After refinancing, our private financiers have no net cash invested, still retain their ownership interest, have net positive cash flow with strong cash flow margin, and they can roll their cash out into the next project tax-free. It's cash out from a loan. Acquisition criteria. Multifamily properties of about 20 units to 50 units that will be attractive for displaced homeowners and for household formation. Primary geographic focus is in the sand states of Arizona, Phoenix and Tucson, Colorado, Fort Collins, Denver, and Colorado Springs, Nevada, Las Vegas, and Henderson. We will also look in Texas and Oklahoma, oil patch as a secondary priority. Locations near public transportation, shopping, and employment. Managerially or physically distressed Class B or Class C. Value-add opportunities that match our required yields and fit our target demographic. Middle market trade area. Unit mix at least 50% two-bedroom units, at least 25% three-bedroom units, possibly combining adjacent units to increase the number of bedrooms depending on cost effectiveness. Focused asset management. Utilize proven marketing and management strategies to reposition underperforming properties. Implement lifestyle community approach with emphasis on stable household formation. Leverage the power team experience. Engage local market of team professionals. Grow net operating income (NOI) through proven revenue maximizing strategies and best practices management. Additional strategies to increase revenues. Add interior washer and dryers. Provide access to cable or satellite entertainment services for a percentage of revenue. Add utility bill-back system, RUBS, or submetering for possible condominium conversion. Provide premium rent pricing for preferred units, for example upstairs versus downstairs, and view units. Reduce unit turnover by rewarding good long-term tenants. Cost-effective quality improvements for both the interior and the exterior, clean and comfortable. The investment process cycle. Process cycle overview. We start with a property search. When we find a suspect property, we perform financial analysis on the operating data and the rent roll. If the suspect looks like a potential prospect, we then enter negotiation and contract with the seller. Once the property is under contract, we conduct due diligence with local professionals. We escrow financing from our common equity investors. Then we close escrow with our private lenders and equity financiers, acquire clean title to the property. Immediately we begin repositioning and stabilizing the property, seasoning and refinancing the property with cash out completes the cycle. Community lifestyle. Unmatched competitive advantage. Solves daily living problems of the target demographic group. Clean and comfortable. Improves the quality of life for rental customers, our clientele. Creates a unique living experience so that it's not just another apartment community. Builds long-term residents, which leads to higher occupancy and higher rents. Tenant concerns. Managing gatherings for family and friends. Managing large household family size. Cooking space and quality kitchen appliances. Social gathering place for stay-at-home parents. They don't want to live in a box, especially after getting displaced from a single-family home. Our solutions? All properties have large kitchen with open space, clean, comfortable, modern interior and exterior. Our larger properties have community activity center for social activities, after-school program for kids, playground and barbecue area. Keys for success. Management selects an experienced power team with a proven investment strategy for acquisition, repositioning, and asset management experience in repositioning and stabilizing multifamily properties. Focus on displaced former homeowners. One of the biggest impacts to the rental housing market is the changing demographic profile of this country. Displaced homeowners still want clean, comfortable shelter, and they will pay for it. Offer unmatched competitive advantage. Create a unique niche community lifestyle for displaced homeowners who are shifting to rentals but still require cleanliness and comfort. Our community lifestyle attracts new household formation as well. Favorable industry and economic conditions. Multifamily properties have the strongest real estate industry fundamentals of all asset classes, and real estate intrinsic values are well below replacement costs in many areas, creating great buying opportunities. Physically and managerially distressed properties offer the deepest discounts and the greatest upside potential for repositioning and stabilizing by creating strong protective margins for cash flow and created equity. Smith Syndication works with private financiers. Smith Syndication is pleased to offer competitive investment alternatives for sophisticated and accredited investors, especially those who are looking for better yields than stocks, mutual funds, or bonds, and backed by solid commercial real estate with professional management. Smith Syndication is executing a tightly focused acquisition strategy of buying middle market, Class C or Class B, physically or managerially distressed multifamily assets that can be repositioned toward the rapidly growing displaced former homeowners demographic niche market using a community lifestyle approach and providing for new household formation. The Radiant Wealth Creation Formula is a time-tested, proven business model for acquiring distressed assets, repositioning to a higher and better clientele, stabilizing and refinancing to redeem the private repositioning financing, then reinvesting the tax-free cash out into the next project. Shifting the equity into new projects while retaining cash flow creates infinite yields. We have learned that buying value-add, underperforming multifamily properties and repositioning them to a growing and underserved target segment using the Radiant Wealth Creation formula creates excellent opportunity for profit. Creating more pricing power from unmatched competition. Managing risk better because of the predictable outcomes. Producing consistent investment returns from stable operations. Our Radiant Wealth Creation formula increases prosperity for society. If this niche real estate investment strategy appeals to you, then we cordially invite you to contact us to learn about how you can be a private financier for these prosperous projects. You can learn more by contacting us. Jeffrey D. Smith, General Manager, Verity Investments, 1067 South Hover Street, Unit E-205, Longmont, Colorado 80501. My direct number is 303-774-9381. My email is Jeffrey, Jeffrey, -Smith at smithsyndication.com. Or you can go to our website, www.smithsyndication.com, for more information and educational materials. This has been Smith Syndication by Verity Investments. My name is Jeffrey Smith, and thank you for your support.